Hi there, let's take a look at measures of development. A country develops when improvements are made to the economic growth, technology use and welfare. This causes the citizens' quality of life to improve. Different countries are developed at different levels. The difference is called the global development gap. Some examples of measures of the development are birth and death rates. Birth rate is the number of live babies born per thousand in the population each year. Death rate is the number of deaths per thousand in the population each year. Infant mortality rate, the number of babies who die before the age of 1 per thousand babies born. Gross national income per head, which is the total value of goods and services produced by a country in a year, is equal to GNI per head is equal to the GNI divided by the country's population. Literacy rate, which is the percentage of adults who can read and write. Access to safe water, which is the percentage of people who can get clean drinking water. People per doctor, the average number of people for every doctor. Life expectancy, the average age a person can expect to live to, and the Human Development Index. This measure is calculated using life expectancy, education level, and income per head. It ranges from 0, which is least developed, to 1, most developed. Which of the following is not a measure of development? Is it infant mortality rate, birth rate, life expectancy, access to electricity, or GNI per head? This is access to electricity, but the World Bank Group has lots of different development indicators which can be used, and while access to electricity is not a widely used one, it is definitely possible to have a look. But the ones that you need to know for your exams will be infant mortality rate, birth rate, life expectancy, GNI per head, but not access to electricity. Different examples of measures of development are gross national income per head, birth and death rates, infant mortality rates, people per doctor, literacy rate, access to safe water, life expectancy, and Human Development Index. There are limitations to measures of development. The standard economic and social measures of development have limitations. Development is complex, and measure of development is difficult because it includes so many aspects. Different aspects develop at different rates, and so using individual measures to quantify development can be misleading. By using multiple measures, we can get a more accurate development. Alternatively, we can use single measures that take into account multiple aspects, such as Human Development Index, which considers life expectancy, education level, and income per head. Let's quickly recap that. How can we avoid misleading indicators of development? We can use more than one indicator. We can use measures that consider more than one aspect. Let's have a look at classifying countries based on wealth. Classifying countries based on wealth can be misleading. Because GNI per head is an average, variation between regions and classes is excluded. However, due to its simplicity, this approach is still common. Lower income countries. The poorest countries in the world, like Somalia, Nepal and Ghana, are called LICs. The GNI per head and quality of life is low. GNI per capita of $1,045 or less. Now, just to be aware that the term LICs, lower income countries, is primarily used by the AQA exam board. In other exam boards, for example, Edexcel tends to use developing and emerging economies instead of LICs, and NEEs for newly emerging, and OCR uses different things. So make sure you have a look at that before you just take your exams. Newly emerging economies, NEEs, such as Brazil, India and China, are rapidly becoming more wealthy and the quality of life is improving as well. Higher income countries, HICs, the wealthiest countries in the world, such as the UK, USA and Canada, are called HICs. GNI per head and the quality of life is high, and GNI per capita is $12,746 or more. In which type of countries is GNI per head and quality of life low? It's in LICs. Which of the following is not a wealth-based classification of country? Higher income country, moderate income countries, or lower income countries? The correct answer is moderate income countries. A country develops where improvements are made to economic growth, use of technology, and welfare. The three different classifications of countries based on wealth are newly emerging economies and lower income countries. What do we call the difference in development between different countries? We call this the global development gap.